The market grinds to 4150. Is this a launching pad or a pullback? Find out next on Invest with Jacob. The market grinded up to just short of our 4150 target, setting up a moment of truth for later in the week, which we will get to in just a minute. Welcome to the show, guys. My name is Jacob Gabbard. This is Invest with Jacob. If you watch this video and you like what you see, I highly encourage you to hit that subscribe button. It will give you these videos every day where we give you our market analysis, an update on our 100K challenge, which we're trying to take 6,000 and turn it into 100,000, as well as our trade setups. So let's start with our 100K challenge. We're actually sitting all cash right now at about 24,500. And today we attempted a day trade that we just missed hitting out of the park. So we had this setup here, guys. You've got this, okay, straight line across. This is a bullish pattern, so we can learn a bullish pattern here today. It's called a rising triangle. So you're hitting your head across here. You're not going anywhere, but you're also making higher lows, okay? So the lows are getting higher and higher, setting up this triangle pattern. So what we did is we entered right here at this support line and this one move down here, hoping that support would hold and we'd bounce. Well, support didn't hold. We came all the way down to VWAP, which was our stop out. We ended up losing $100 on the trade. We were so close to hitting it out of the park. We stopped out down here and then it immediately took off. So minus $100 in the 100K challenge today. That leaves us at 24,500 and change, up from 6,000 just 3 weeks ago. So we got up near 4150 today. That's an important target for the continued momentum of the market. It's going to be a decision point. The market's going to have to make a decision. So in the futures, which we're looking at now, it grinded up to 4140 and got within 10 points of the target. But in the SPX, it went up to 4148. So it was within 2 points of the target and didn't quite hit it. You can see 4150 right here, and it didn't quite get there. What would keep the momentum up is another push higher up through this 4150 zone. That's the moment of truth. Once it gets through, how it reacts, or once it hits it, how it reacts, is what's going to decide how we make our next entry into the market. So if it moves through 4150 up to 4175 or so, right in this region, 4170 to 4175, then we're looking at a more direct path to 4400. If it comes up through 4150 and fails and starts to come back, then we're looking at a more indirect path to 4600. Okay? And we talked yesterday about how that sets up for a bigger move up. But this is really the inflection point. 4150 is going to tell us what's going to happen in the coming week and month. So if we move up and into the 4170 range, 4175 range, then we're on a more direct path to 4400 and we'll look to enter the market there. However, if we come up and retreat, then we will settle down here on the pullback and we'll see where it bottoms, and then we'll look to make a market entry here. Our time frame for these two things, if it goes straight through 4150 to 4170 and on up, we're looking at May hitting 4400. If it goes up and pulls back, we're looking at probably June, mid to late June, hitting 4600. So I'm not opposed to either one. They're both going to be high reward, low risk trades, but we need the market to tell us what it's going to do before we put our money in play. So right now we're sitting cash, waiting for the market to tell us what to do. All right. One thing to note, guys, we are in a wave 3, and one of our subs asked about shorting a wave 3 or shorting during this time. And one of the golden rules of Elliott Wave Theory is you never short a wave 3. They're just too powerful and they move up, and people still think that news cycles can drive the market. Like today, the inflation number came out and it was higher than they thought it was going to be, and the market went up. Last March, after the crash, the COVID numbers started to come out, the economy started to crash, all these bad things happened, and the market almost doubled over the last year. So to say that the news cycle drives the market, I think is a little misplaced and can get you hurt really bad in your pocketbook. And that's what we don't want here. We want to make money here together. So we never short a wave 3. That's our golden rule of Elliott Wave. I will never tell you how to trade. I'm not a financial advisor. I would just say that I will never short a wave 3. That is just all I'll say. Okay, guys? So the key takeaways: up through 4150 to the 4170-75 region, more direct path to 4400 in May. If we go up to 4150 and pull back, then we're looking at a more indirect path to 4,600 in late June. If you liked the video, smash that like button down below and help us out, spread the word, share the video. We love you guys. Happy trading out there.